Let's check out SPY. So we got a bit of a gap and then a gap close right away this morning. And so now, if we just kind of look at where are we now? Let's just, I guess I got to close that up a little bit. That's fine. Let's see. That's regular session. Let's do regular session with pre-market. Why not? Yeah. So if we look at, I guess I got to look at the daily chart. It's just a little bit too confusing with. We'll look at the SPY, Qs, and IWM. You're better off, Frankie, with a proxy. So rather than buying, because you're not a professional investor, nor am I, trying to buy the dollar doesn't make sense. So if you're under normal circumstances, if as you have seen, because you've been around here for a while, if you are, I know, you know that I'm not a professional investor. If you see the dollar moving down under normal circumstances and breaking its structure where the dollar looks like it's going to continue lower, it's usually a good bet to buy GLD. But GLD can be very expensive. So you can go to GDX, which is less expensive. It's the miners, so it's different. It's a conglomeration of mining companies, but typically that is a good place to go as a proxy for the dollar, the inverse of the dollar. SLV typically is, but not now. The speculators have driven silver up to the point where it could crash. Now it could spike higher. It's too volatile to try to play the gold and silver game. That was a few months ago. So we're not playing that game now because we've got too much hyperactivity around the US dollar, metals, our economy, war. So now is not the time to try to jump in and out of the US dollar trade, so to speak. But typically, if you want to buy the US dollar thinking that it's going higher, you're better off shorting gold. But before you're going to short gold, you've got to just, look at the gold chart from a technical perspective and see if this is something that is starting to break down and coming down to retest. Right now, it doesn't look like that. When you have geopolitical tension, a lot of people move to the dollar. So a lot of times you will see the dollar and gold moving together, which is antithetical, but that's why right now is not a good time to try to play the dollar. Well, as I said, yes and no. There are investors in times of battle and war and conflict where they will put their money in gold. They'll go to a safe haven, but that doesn't mean you won't see the dollar rising. So you can see the dollar and gold rising together, as we have seen. Eventually, that comes to a head. Eventually. That's why it's just something not to be thinking about trading it. So here we are at 685. We're definitely at a resistance point here. I don't think there is a bullish narrative until you can take out this high. But before that high, you got to get a close above the daily 50. We're not there yet. As far as to the downside, as I said earlier, we had quite a move yesterday. But really, the initial move to the downside would be to take out today's low is now a significant level. And then below that is going to be this, which, as we've talked about, is 677. So this is the first, today's low, and then 677. So 679 and 677. But what's keeping everything pretty buoyant is the options market. So if I look at the options chain for the SPY, let's just see where we are. Yeah, that's why here's the move. See where we are? 686-ish now. Look at the number here. 685 was the number. We got to 685, but 686 started to pump and 687 started to pump. You even have the 690s alive with a couple of 100,000 calls. That's what's keeping price up. If this number, this 690 number gets up, over say 250,000, then the market might have to shove up to there. So that's a potential. But you can see the rising numbers starting with 685. That's the first place that the market, it gapped down, it gapped up, filled the gap, and then surged right up to this number, right up to 685. Everybody see this? See them open? I want you to really see the correlation here. So the blue line is today's open. We opened, we dropped, down to fill that gap, and then we surged right up to here. You see that surge right here that happened in the morning, 10 o'clock, 10:15, 10:20, 10:25, 10:30. Everybody see the surge? Right? Right up to here, right up to here. Okay, that move was a result of this right here. 312,000, it was obviously less back then, almost 300,000. See these two big numbers in calls? Look where they are, 685, 686. That's exactly where the market surged to. But then you saw puts come in at 685, 4, 3, 2, 1, and then look at the 680s. So the 680s start to show up, and that starts to bring it down. That starts to bring things down ever so slightly, right? So the options chain is at work. We could see a breach. I think if we lose 685, then the reverse gamma might bring us down to 680. So one thing that you could do from a day trading perspective, if you wanted to, if you see a breach after 2 p.m. of say 680, 685, right? Breach below 685, you could go ahead and buy the 680 puts for today's expiration and see the drop towards 685, make your money and get out. It may be a 5-minute, 10-minute, 20-minute trade. Because what the market maker will do is have to sell off because of this volume right here at 680. But it ain't going to happen until this shelf here at 685, 67, until that breaches to the downside. So that's what we're looking at in terms of the SPY. Any questions on the SPY yet? So again, you have your top, you have your 50, today's low, and then 677. That's what you're looking to see happen.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.